Welcome to our seminar. We're delighted to have you here today. I'm Peter Stayne. I'm a director in Werksmans Commercial Department and the chairperson of Lex Africa. Lex Africa is an alliance of African law firms. It was the first ever African legal alliance formed in 1993, and we're the largest legal alliance. Werksmans was a founding member and is the administrator of the alliance. We now have over 600 lawyers in 21 African countries, and we're always looking for growth. Ultimately, we want to be represented in all 54 countries. The term Africa is often misused. Africa is not a country. It actually is 54 countries, each with a huge and rich diversity of languages, religions, cultures, and business and investment opportunities. The purpose of today's seminar is to discuss and brainstorm on the business and investment issues and outlook for private equity, Nigeria, Zimbabwe, Mozambique, and Zambia. I want to thank our Lex Africa members who have traveled to be here today, as well as our guests, Diana Games, the CEO of Africa at Work, and the Executive Director of the South African Nigeria Chamber of Commerce, and Tanya van Lill, who's the CEO of the South African Venture Capital and Private Equity Association. I also want to special thanks to the Werksmans and Lex Africa team for arranging this wonderful seminar. Without further ado, let's get started. We want this to be an interactive session, so please feel free to ask questions and raise issues. We want this to be some real brainstorming. The first panel is on private equity. My colleague Shayne takes it from here. Thank you.
Hi everyone. As Peter said, my name is Shayne. I'm a partner in Werksmans' corporate team. I head up the investment funds division and also our Africa practice group. So I'm very happy to have all of these illustrious people on our panel today. Let me perhaps just introduce you before we start. On my left is Sternford Moyo, who is the senior partner of our Lex Africa member in Zimbabwe. And Sternford has had a long history in law, starting out in litigation, moving through to financial services and general corporate work. He's also a former president of the Zimbabwean Law Society. And he's also had some work in the real world. I see that you were chairman at one stage of Stanbic Bank in Zimbabwe and also Schweppes. A broad experience. Osayaba Giwa-Osagie is the senior partner in our Nigerian Lex Africa member. He's also a doyen of the Nigerian legal industry, spending his first 25 years litigating, including running the first action for the Securities Exchange Commission in Nigeria, and then moving into corporate and commercial matters. And he's very active these days in mining industry, capital markets, banking, and foreign investment in what on certain days is the largest economy in Africa, depending on the exchange rate. Tanya van Lill, some of you who are in private equity will already know Tanya. She's the CEO of the Southern African Venture Capital and Private Equity Association. This is an industry that was established in 1998 and has 160 members, and that represents about 165 billion rand of assets under management. And Tanya joined SAPCA having headed up the academic programs at the Gordon Institute of Business, where she also served on the board of the Executive MBA Council. So an illustrious panel. I was looking at the timelines. There's some research that's come out showing about $6.5 billion of cash has flowed into private equity projects in Africa between 2011 and 2016, which is a deal value of about $22.7 billion over that time, for a total of 919 deals. So nearly 1,000 deals in 5 years, which is an amazing number. And it got me thinking of our experience over those times. And I remember in 2011 I was a lawyer based in Paris, and we had a team from Barclays that came to Paris to try and sell Africa, put on a big road show, and about 5 people turned up, most of them in khaki pants, looking like they had just come out of some African country. So it was very much preaching to the converted. 2014, with Werksmans, we were on a trip to New York, meeting with potential investors in Africa, and most people were kind of disinterested. You know, a lot of people said what Peter said, that, you know, we're not really interested in that country, and then we had to say that it wasn't a country. But the one discussion we had that sort of left a mark on us was, one of the lawyers said to us, we don't really want to be in Africa, but we have to be. And so I guess we need to speak to you and learn about Africa. And then in December last year, we had a group of American pension funds who came out to South Africa. And it was all doom and gloom from our side. And they sort of couldn't understand why we were so pessimistic. And what they said to us is, we can't meet our commitments to pensioners in America because we can't get the returns on investments in Europe and state that we need to meet those commitments. So we have to invest into emerging markets. And you think your corruption is bad in South Africa, but have you been to Brazil lately? And you think, you know, the security situation is bad, but there could be a nuclear war in Korea. So they didn't think it was such a bad place to be, and obviously there was a lot of interest there. So that's kind of, you know, 2011 to today, there seems to have been a big change. But I think part of the difficulty we have is assuming that everything is happening in the rest or across Africa in the same way. And so I think the advantage that we have here today is having you gentlemen, especially and Tanya representing the broad industry, to talk to us about some of the sort of on-the-ground changes. So perhaps starting with you, Sternford, if you could give us a flavor of private equity in Zimbabwe. You know, what's the sort of size of the industry, and where do the investors come from? What sort of things are happening in Zimbabwe in private equity?
Thank you, Shayne. Well, Zimbabwe, first of all, is really a place where opportunities are today. As far as private equity is concerned, I think many of you will be aware of the fact that our infrastructure is broken. We have huge requirements, particularly in sectors such as energy. Our industry presently is operating at roughly about 40% of capacity. And despite that, we don't have sufficient power to power industry. So if our industry were to operate at 100% capacity, we would have a huge power deficit. We already have a huge power deficit right now. So opportunities in areas such as solar, for instance, are huge in Zimbabwe. The rehabilitation of broken infrastructure such as roads is one area where investments are needed. In mining, for instance, I think you'll be aware we have not less than 60 minerals in Zimbabwe. We are the second largest producer, or we have the second largest deposit of platinum in the world. In fact, some people think that it is the largest. It's just that there hasn't been sufficient exploration. So opportunities are huge. In mining, you'll find we have many flooded mines right now, gold mines, rich mines in other words. Even our gold dams were not properly worked with proper equipment and proper technology. You'll be able to recover quite a lot of gold from some. The whole of Zimbabwe really is like a huge gold mine. There's no gold everywhere. Just requires to be mined. I think you will have read about lithium in Mandebele north part of Zimbabwe. We have a huge deposit there. Coal mines, you know, our coal, really high coal, coking coal, all over, especially in the Mandebele area. So opportunities are huge. Unfortunately, we do not have many players as far as private equity is concerned right now. We have about 4 active private equity firms. These are firms like Takura, which is a very small fund, 75 million, and is working on a second fund of about 125 million. We've got Rimogo, which is a fund of about 45 million. These are US dollars. And also working on another fund. It is basically a private investment vehicle. There is another which is also quite active, but also mainly around a corporate, which used to be listed and is no longer listed now. So it's a vehicle for investment for one of the wealthy business persons in Zimbabwe. We also have pension funds, actually, which are quite active in private equity. Even some of the listed companies have been active in the private equity space because of the fewer players that are to be found in our country. So opportunities are huge, and the opportunities are not really being taken full advantage of. The broken farms is one area where opportunities are massive. You only need a few changes to take place, under the new dispensation before we see inflows coming in. So what I would say is that Zimbabwe has enormous opportunities as far as private equity is concerned. The opportunities have not really been pursued to the extent that they should. And they are in various sectors, from infrastructure, gold mining, fast-moving consumer goods, and even industrial revival, because our industries are broken at the moment. They require retooling. So there's huge opportunity in that area.
Osayaba, is that sort of the theme for Nigeria, commodities-driven type investing at this stage?
Yes, there are lots of opportunities in Nigeria, and as you know, we depend a lot on oil resources, but the current government has tried very much to diversify the economy. We were, until last year, in a recession, for the first recession in 25 years. Our oil production dropped, was as low as 1.1 billion barrels a day, but within 24 months it increased to 2.2 billion barrels a day. And with the efforts of the government to diversify the economy, emphasis on agriculture, the economy is back now. And the government is also working very hard, to reform, the way business is done in Nigeria. So at the moment, structures are being put in place, to diversify the economy. Policies are being introduced to make it easier for foreign investors to come to Nigeria. But having said that, in the last 4 or 5 years, we've had a good number of PE companies coming to Nigeria and buying into companies. We had the Helios, the IHS, they invested a huge amount of dollars buying the towers belonging to Etisalat and MTN. We have IFC, they invested in the Jabi Lake Mall in Abuja. IFC invested about $65 billion in a health company, Hygia. We also have the Carlyle Group, they invested about $147 million into Diamond Bank in Nigeria. So you have companies, private equity companies coming from different parts of the world, from New York, from Senegal, all over the world, coming to invest in Nigeria. So, and with the political stability in Nigeria, our president having recovered from his health, I believe Nigeria is the right place to come to at the moment. The population is there, you have the educated people, and you also have infrastructure deficit, which makes it easy for people who have the capital and the knowledge to come into Nigeria and just to key in. Some years ago, we had about 3 private equity companies operating. Now you have a large number, international and local. So we are inviting people to come to Nigeria now. The policies are right. Thank you.
Tanya, I mean, South Africa is obviously quite a sort of developed market for private equity. I saw Deloitte's pronounced 2016 to be the bottom of the market, which suggests that 2016 and 2017 were tough years. But give us a sense of, the SAPCA conference. What's the mood like in Southern African private equity?
So just to give a context, the private equity market in Southern Africa, over 170 billion assets. Average deal size is 27 million rand, so this is rand. The kinds of industries that they invest in, or invested in 2016 based on our industry survey is commercial real estate, IT, services, manufacturing, retail. And 2016 was still fairly a good year for private equity in South Africa. But 2017 was a very tough year. Our funds found it difficult to fundraise, especially funds 2 and 3. They also found it difficult to find good or agree on prices of targets and assets, especially with the political uncertainty in South Africa. So that had a huge role to play in the private equity sector in 2017. So we're currently busy with our industry survey again. Early indication is that there's definitely been a downturn in activity from 2016 to 2017, especially from an exit and fundraising perspective. 2016 was a stellar year in terms of exits. Over 18 billion rand returned to investors, which was a high for the private equity industry in the last 20 years. But the mood is changing. So at our conference, people said they can feel a sense of optimism and energy in the room. So the change in leadership has definitely brought about a new sense of optimism to not only private equity, but conducting business in the region. When I go to international conferences, I don't have to convince people about private equity. I have to convince them about investing in the region. And that's what one of our panelists said. They get the sense that the investors are now ready to come to the meetings with their checkbook and not just their notebook.
Osayaba, you were mentioning the IFC being involved, and certainly that was my experience when we first started setting up private equity funds going into Africa. You had to have a DFI or a number of DFIs involved, so these development finance institutions. But it seems to me that is dying down. It's kind of like they've paved the way and sort of set standards. I know things like environmental and social governance, which they pushed for, now seem to be de rigueur in a lot of the things that we're doing. Do you still see DFIs as involved as they were before, and if not, who's picking up the slack?
The DFIs, they're still involved. IFC is still very involved in Nigeria, and you also have other companies like Actis. For the IFC, I think they look out for good opportunities where they can get good returns on their money, and they also are very careful to make sure that whichever company they invest in, they have proper corporate governance structures, they pay workers properly, they comply with the Companies and Allied Matters regulations, laws on employment laws, so that when they come in rather at a low price. Spend some years putting in the structures or improving the structures, making sure you have good return on investments, they have good potentials. And just when they are getting to the peak, they sell out. And when they sell out, they make a very huge profit. So IFC has been active. They have the Actis group from the UK. They're active in Nigeria. You have African Capital Alliance, which is a Nigerian group. And when they sold their shares in MTN to a South African group for about $335 million. A few years ago. But if we look at the current position of MTN, their capitalization, I think, has dropped from about 25 billion to about 5 billion, at least the Nigerian arm. So if they sold at $335 billion a few years ago, they must have sold at a very good price. So that's very good. You have the Vectis Group from Greece, Emerging Capital Partners from the States, Ethos, Helios Investment Partners. We have very good, strong private equity companies operating in Nigeria at the moment.
Sternford, what about Zimbabwean DFIs?
Yes, the largest private equity firm is actually got that type of support. Without that, the fund would have been a lot smaller than it is today. And the second fund also is relying largely on development finance institutions investing in it. But one sees a trend, as you correctly point out, in which development finance institutions are really slowing down as far as investing in Africa is concerned, from what I can see. But the opportunities are attracting private investors in a big way, as I say. We had a problem, as you were aware of, the environment in our country not being very attractive to foreign direct investment. So we didn't have many investors coming in from outside. But with the changes that took place recently, we expect that that trend to change dramatically. We expect more foreign investment to come in. Our new president has announced that the country is open for business. There has certainly been positive pronouncements to suggest that ease of doing business is going to be taken very seriously. So we do expect quite a lot of capital to flow into the country, because that's where growth is really. If you come to Zimbabwe right now, you're picking assets at heavily discounted prices, and opportunities for growth are therefore huge.
And that's in the private equity space.
In the private equity space.
Tanya, one of the interesting things that came from all these DFIs being involved was the whole ESG thing, and also this sort of question as to whether investors are investing into Africa because they feel some sort of responsibility, or that they are converting money that was charitable into private equity investment. We've actually seen, we were involved in the setup of 1001 Voices, who tries to blend both. But it does seem that this ESG trend is there. Are you seeing that, and what is this sort of deal between charity mixed with funding?
So 30 years ago, when private equity was established in South Africa, DFIs played a massive role in being the anchor investments. And from their requirements, fund managers were already acquainted with or used to ESG kinds of measures or impact measures. So South African fund managers traditionally are more comfortable and afraid with incorporating impact investing and ESG measures into their deals because of the fact that DFIs have been involved in South Africa for so many years. So there's always been a requirement from them as an investor. But to the point now that they're so comfortable with it, it's now a business imperative. It's no longer a nice to have. We see a lot of our fund managers measuring the impact of their investments beyond just the financial impact that it's had. Even SAFCA, as part of our 20-year anniversary, have launched our industry awards, where we want to recognize the impact of private equity investment through the eyes of the portfolio companies. So not through the eyes of the fund manager, but what is the impact then from the portfolio company perspective, from environmental, social, and in small nuances, even for our particular region, it's not only about job creation, it's about job preservation. Just making sure that people still have jobs is something that's very important in this particular context.
Yeah, and quite a tough one for private equity, which is always criticized for sort of going in and chopping up the company and kicking out all the employees and selling off the assets.
Exactly, that's the perception that some investors might still have out there. Not only investors, capital seekers. The barbarians of the gate, the raiders of the lost ark, coming in to raid your business, leverage it and strip it. But private equity in South Africa is completely different to that. When I joined the industry a year ago, I also had the same perceptions, not coming from the industry. But I must say I was pleasantly surprised to see the level of camaraderie and collegiality that we have in South Africa for private equity, for deals, for making a difference, for having a positive impact.
And do you think that's unique to Africa and South Africa? Or does that exist elsewhere in the world?
It definitely exists elsewhere in the world, especially in developing economies, where there is a need for specific aspects beyond financial returns. At international conferences, when they talk about impact investing, especially in the US and Europe, it's not a foreign concept for them, but it wasn't something that they always had at the back of their minds, where we always had it at the back of our minds.
Does anyone on the floor have any questions? I'm turning my back to you guys and not recognizing you. All right. One of the things that I sort of towards closing wanted to chat to you about is what we can do more to increase private equity investments in these countries. And perhaps just while you've still got the mic, Tanya, you guys have been very successful as an industry. And what are the kinds of things that you found have worked to boost the industry generally?
So one of our strategic objectives, and it's always been part of Safca's DNA, is promoting the asset class. So in other words, making sure capital seekers understand private equity and see it as a potential investment route, and also institutional investors to understand that you can allocate some of your assets into private equity. What we've